All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Friday, March 6th. So, end of week video. Holy cow, volatility this week. Very crazy day today, this week with back and forth price action. Did give you some opportunities to scalp, definitely today, a couple times today. We'll go over the price action today. I'll talk a little bit about the charts, which I think are kind of a mess at this point, but it is what it is. So you have to. I've been talking a lot this week about having to adapt your trading style to the market conditions. I would reiterate that. Obviously, everything that I'm talking about is for information purposes only, not giving out any advice or anything like that. But for me, you have to. For me, I have to change with how the market is moving. We hit a 54 VIX today, before settling in at the end of the day right around a 42. If you are still trying to trade the same way that you traded months ago, I don't know if you're surviving, because you have to change. You have to change the way you're trading, and I mean specifically, like, if you were trading options before. Either like swing trading options, for example, now you have to be doing something else because the volatility is too great and the option prices are too expensive. So let me dive into the markets here. I didn't even update the theme of the day, but I guess you could say virus stuff, a little bit of fear out there, a little bit of everything probably for the day. So where did we finish up? Spies finished for the day down 1.6%, but we were down, I guess, right around 3% for the day. Same thing with the Qs. They finished down 1.7%. So it does feel like a victory for the day, even though these numbers overall are pretty bad. TLT, my goodness, what a move. I think this is the biggest move ever for the TLT, for the long bond ETF. I don't remember a day in going back 2008, 2009 when I traded institutionally. And further back than that, I don't remember a TLT up 5% day or bonds moving that much. Interesting as well that today was the biggest volume ever for this ETF, right? And I know that the bond market is much bigger than this ETF, but it's the ETF that I use to trade. I know a lot of people trade bond futures. I used to do that a little bit too, when I was on the ETF desk. When we had to hedge a big order, but I mean, look at the volume. It's 183 million shares. The last time that TLT saw volume like that was back in 2011. So, I mean, this is a ginormous move that took place today. And if you look at some of the charts, I'll go over TLT a second. I mean, it could be a blow off top. I don't know that. I think that this is a good example of, first of all, something that's trending. And I typically try not to. I know that retail traders, and I'm sorry to categorize retail traders this way, but I guess institutional traders probably make this mistake too of trying to fade big moves. I mean, this has been a whole big, colossal move the last 2 weeks. And I've always felt that you make the most money following the trend, because look at the move today in TLT. So if you've been trying to fade this thing, for like a longer term swing trade, you've gotten hurt, right, by doing so. So you just kind of have to get out of the way and let some of these moves can and sometimes are bigger than you think they're going to get when there's momentum like this. So interesting looking candle for the day. That does look like a major blow off top in the bonds. I know everybody's thinking that it seems like the popular view is yields are going to get down to zero in the 10-year. I could care less what the popular view is. This to me looks like a blow off top if I had to guess with the volume, but we'll see. I talked about this earlier in the week too, how this candle looked very toppy in the bonds, and we never lost the 5 period moving averages, right? The 5 period moving average, which is this little gray line I have on my chart. So, if you have indicators on your chart, make sure that you're using them for one particular thing or another. The 5 period moving average has helped me a lot when equities have done this before, and they've held, above the 5 day moving average for months. Regardless of what the candlestick looks like. But this is outrageous. I would say an up 5% move. So I didn't put on anything. I was just too busy, scalping and day trading today, to think about fading TLT. But maybe it'll give us an opportunity on Monday. Even though, like I said, I don't like to fade these moves, but this thing just looks ridiculous. Big volume on that, and you could see it in the long bond as well. So something it'll be something to think about. And when I do try to do counter trend trades, they're much smaller than my normal trade. All right, so let's go ahead and did I cover all the performance for the day? Interesting that the transports rebounded. I'm guessing what happened here is a combination of a story out that was probably leaked that the administration might be doing something to help some of the travel companies get through this bad time, and then I would think some short covering. JETS Jets was the only ETF. It's an airline ETF that finished in the green today. So I'm guessing that there was some short covering based on that story that happened. We don't know the details of what the administration, I think, is going to be doing. I think they said something about tax benefits or reimbursements or something like that for travel companies. So we'll see if we get the details of that. But that's your transports up 2.7% from the open. They did not finish in the green. You could see there's not one thing I have on the green and green that finished on the day, but because I don't have the Jets ETF in there, the JETS Jets ETF. Sorry, it's funny. And then you could see a whole bunch of different sectors like healthcare did very well today. Only finished down 0.5%. XLV, as in Victor. Utilities also almost came all the way back. When we look at I'll look at the 1 week performance as well. You're going to have some surprising numbers in there. And then I think what's really concerning is what happened to oil today and what happened to oil companies. This is probably going to be some type of an issue going down the line, whether or not some of these companies are going to make it. It's really nasty price action. I was looking at something like Hess, which it did close off the lows, but this is going to be, in terms of bonds and junk bonds and things like that. I don't know how they're going to be able to finance some of their things if they continue to get hit like this. We've talked about as well. So many people have been talking about taking shots at energy names. And I've said for a long time I don't want any part of energy names. They've broken down. They've broken down below the 200-day moving average. That's a downtrend. I don't know why so many people think that there's value, that they think there's going to be smarter than the market. I have no interest in playing anything in the energy space unless it gets over the 200-day moving average and gets back in an uptrend. I just don't think. I think it's too risky to deal with. But that should tell you something. I think that's the other thing. People sometimes don't realize that if a name falls below the 200-day moving average, it's now in a downtrend, and it should be telling you something, right? Price again is always correct in this situation. So we'll move on from that, but I think it's. I wanted to analyze the index charts. We'll do more of this weekend in the weekend newsletter. Not the weekend newsletter, but the weekend video that I put out, which I think really kind of sets you up for the week in terms of not only the watch list that I provide, but also what I'm looking for in terms of levels. And you can go right here, and you can go to the products page on TribecaTradeGroup.com, and that's our Elite Trader package. So you could sign up here to be a member and receive all that information on the weekend, so that you're ready to go for the week. So bottom line here, number one thing here on the daily chart, we broke below, just as I mentioned in yesterday's video, we broke below the 200-day moving average. We've lost the uptrend for now. On the weekly chart, it's also very messy. We're now inside value for the week. I was on TD Ameritrade Network. They were probably shaking their head with what I had to say, but we could go down to 27.74 if we can't retake 30.30. Right? Because we're now in value for the year, something that we haven't been at all We did close just barely in value last Friday, but this was definitive. And I think yesterday we were right around this level, 30.30, and and we have fallen inside. So we've lost. So that means basically range bound. We're sideways. We no longer have an uptrend in the S&P. It is what it is. So if you're a trend trader like me, that means there's no major trend anymore in the S&P 500. So you kind of have to trade a little bit differently. Sit on your hands a little bit more with taking swing trades, unless you're playing individual names, which again is fine. But I always like to look at what the S&P is doing first. Qs are a little bit of a different picture. Qs are still in an uptrend. They are above value for the year. They are also above the 200-day moving average, so they look the best, because IWM is going to look pretty ugly too here in a second. IWM is below value. Sorry, not only below value, but way below the 200-day moving average. Also has took out last week's lows. This is a problem area. It's a problem area, and weekly chart is also below value. So just because we bounced at the very end of the day, I don't think that's really going to make that much of a difference right now. It's going to take a while for this situation to straighten itself out, not only with stocks and charts and so forth, but what's going on with this virus. The more people stay at home and do less, you have to figure there's less consumption going on, and that's really going to hurt the economy and the world economy if the U.S. consumer. So again, this is my opinion stuff, but I think the more that people are fearful about what's going on right now, I think the more damage it's going to inflict. So buckle up. I think things are going to be really interesting. There will be opportunities, just like we capitalized today on some things today. I wanted to just show you the S&P, just a couple things that I noticed for the day. 1 hour chart, which kind of helps for day trading a bit, and for shorter term swings. Look at what this S&P did earlier this morning when we rallied right into the bottom of value. So I mean, I know that there's a ton of headlines on the tape and it seems a bit unpredictable, but if you have a system like this, like the market webs, we broke value going into in the overnight session, and we came back and we retested. And what did I say at this point in the trading room? I said, hey guys, be careful of this. We've bounced. We've done this several times this week. Don't get greedy. Take profits and move on. And that's basically, if you look to see how I traded today, I was in some Apple. I traded some TLT puts, in and out of these things really quickly. If you look at the time where I took these off, was right around 1050. Why? Because right here, we ran the course up until right here, 1050. Right, as soon as I saw that we weren't going to break this 200 period moving average, I got out. Notice here, we failed here. We approached it again at 1 o'clock, 1:20. We failed again. We almost failed again here, but we pushed through. But basically, all we did was just get back to this. So this 1 hour value area will not be as significant next week, but you could see what the shape and the size of next week's value area is, and it's going to be this 29.73 is going to be the barrier. So I hope we start the week in value rather than below, because it's going to be a pain in the neck to get through resistance to the upside. So again, a lot of things going on here, but if you're using this, and I said this to members several times today, I said watch these bounces. If they cannot break through this little resistance, very interesting what we did down here, right? At that time, the VIX got all the way up to almost a 55. So still very heightened, not even close to being out of the woods yet with a VIX of 42. Earlier in the week, let's see what this VIX daily is going to look like. So I don't know. Does that mark the top? That looks like a very toppy looking candle to me. Again, I'll go with what I said earlier. Regardless of how toppy this candle looks like, I would watch for price to get back below the 5 period moving average here. That would be some confirmation, right? The reason why I look for confirmation, um, because you have something to basically trade against, and I think trying to pick the top or the bottoms and things is a recipe for disaster. I know, again, newer traders try to do that quite frequently before they learn to wait for a little bit of confirmation, but it gets me out of bad situations by not trying to use a crystal ball and try to make predictions. So I would wait for this to come back in, even though this looks very toppy looking, and we'll go from there. What about the VVIX, the volatility of the VIX itself? Yeah, this didn't show you really any confirmation either. So we'll see how that develops. But yeah, at one point this week we almost ducked under 30, and then we're right back up. This was Wednesday, so all in all, very interesting. Um, I wanted to talk just about the week's performance as well. We did some interesting moves here when you look at the overall performance. So first of all, the indices did finish positive, except for IWM, which continues to trail, as we mentioned. Qs were better. Diamonds were actually at 1.7%. Emerging markets, basically international, was down for the week. Huge week there. But look at the performance. It's not that it was your major, like, aggressive areas that were outperforming. First of all, gold miners were the best performing group. But look at utilities, consumer staples, healthcare. These are low volatility uh, areas of the market that really outperformed. Biotech was in there too, a little bit of the home builders because they're rate sensitive. Solar was in there too, but if you notice, I don't think like technology or consumer discretionary, which are two big areas of the market. Oh, here's tech up 60 basis points. So it did right around what the market did, but not any big major outperformance there. I mentioned those two areas, consumer discretionary and tech, because I know that retail traders trade an awful lot of those two areas and very little of things like utilities and healthcare companies and so forth. Maybe not so. I know some. We do have traders in the room who have been trading a lot of healthcare, so that's a good thing. And again, absolutely smoked in the energy group. Also, banks, horrific, down over 6% for the week, even though the S&P was up. Nasty, just very nasty performance. Just a couple names. I'll leave it here with a couple names that saw some option activity. GLD, my goodness. Sorry, not GLD, GILD. Uh, they literally went after calls like crazy today in Gilead. I mean, once they said that there was going to be a test, like Evercore came out with a note, but you could see these big blocks of calls. That I mean, this is, you know, I mean, look at the size of this: $1.8 million, $968,000, 580. I know some people like to tweet out when there's like a $50,000 order, but look at the size of this stuff. This is crazy. The other name that I thought was interesting that saw option activity at the end of the day, which I did go home with, was AMD. Right at the end of the day, like last 10 minutes, 15 minutes. So I took advantage of that. I mean, these are pretty far out of the money. These are 56 calls. What did I buy? I think I bought the 50 strike calls. So again, if we go down here into the trades, that was the last thing I did. I did those 50 calls, but you could see all the scalping that I did today. So again, I got out of everything on the bounce at 1050, and I kind of waited. I dumped a couple trades that didn't work. I probably got a little bit too aggressive chasing some action around 10 o'clock, and I just some of these options, they're like the Roach Motel. You could get in, but you can't get out. So I dumped that. I was holding Zoom for the better part of the day. Just decide I did not want to hold that into the weekend. And then I made some nice trades here with Qs. Nice scalping in the last like 40 minutes of the day. Once I saw that the VIX was going up like this and the S&P stopped going down, I thought there was a little bit of a divergence there, and then we started to see this crater in terms of the VIX. So I was able to make some nice money off of that at the end of the day. I also played a little bit of team. It was down so much, so just a quick scalp again. Not being greedy. I mean, these are singles basically. A lot of singles because it's just too hard if you're trading options with the vol crush when something like that happens. But there's just too much volatility, I think, to really shoot for triples and home runs. All right, guys, so a lot of singles and doubles for me. Have a great weekend, and hope to see you in the trading room on Monday.